Good afternoon, everybody. Hope everybody's doing well.
Good
Good.
morning, Giles.
How are you?
I'm good. I'm feeling extra peppy today. So
Oh, extra peppy or happy?
yeah, I'm just happy and I don't know. I've got all this energy. I don't know what's going on.
What's
So
going on? You taking creatine regularly?
protein. Got great Fairlife shakes here, which is sort of the company that does some of the protein drinks. So I
Oh,
don't know.
okay. Yeah. Yeah. So how's the weather over there in the US?
Weather's good. Everything it's nice because we're getting to the beginning of spring, so I feel like it's going to be 60 today, which is nice, and we're going to
Yeah.
have I'm actually just looking down at my weather app. It's going to be all 60s for the next say week. So that's a nice turning into spring. So
Yeah, that is nice. It's lovely. Yeah. Yeah. We're on the turn.
yeah, how you doing?
Yeah. Yeah. I'm doing okay. Yes. Is the sun shining here in the UK as well? It's not as warm as it was at the end of last week, but it's still acceptable. So, yeah, it's pretty good.
That's great. So we got Season X up here. What are we
Well,
looking at?
this is Turnaround Tuesday, Paul.
Okay. Okay.
So there is a phenomenon, and it's well documented that particularly when if you have a down Friday and a down Monday, there's extra power to the turnaround Tuesday, and essentially, it's the phenomena that after a couple of days of selling, the market just bounces back on the Tuesday because everyone who's they have sold, they're either taking profit or they're just reconsidering if they wanted to be as negative as they were, and you
Yeah.
get this turnaround Tuesday. It's actually the strongest day of the month in
Oh
the
wow.
S&P 500. So if you only had one day of the year to buy the S&P 500, it would pay just to buy it on a Tuesday. So that's how strong the pattern is. It's used by hedge funds and various HFT firms use that bit of data. So that's helpful
Okay.
for us to know that Tuesday is around. No, it doesn't, Najam. If only. Najam asks me I can close my eyes and press buy. Um,
Yeah.
it's never that simple. But it got me thinking as well about the recent sell-off that we've had. And what I was thinking about it is look at the VIX. It's right up over 27. And notice I've overlaid the S&P 500, and whenever we go over that sort of 23, we're getting this sharp downturn in the E-mini. Over the 23, sharp downturn, over the 23, sharp downturn, over the 23, sharp downturn. And then you only start to see the S&P 500 pick up once you're getting back down under that 23 area. Back down under 23, picks up, back down under the 23, picks up, right back down under the 23, that's when we're expected to pick up. So okay, we've got to be very careful of just randomly buying any dip with the VIX elevated above that 23 and pushing towards the highs of the day. So that's the first thing just to be aware of. There's sellers very much still out there, and there's lots of put options in the options market on this recent drop we've had. But I was looking at one analyst who was saying like their current on their model, the chances of a recession, which they put as basically the heart of the model was the Fed cutting by 200 basis points in 1 year as a kind of recession indicator.
Okay.
They're seeing a 10% chance of a recession. So
Okay.
then you've got to reconsider, haven't you, this big drop? Is this oversold now? And if there was going to be a day for recovery, a turnaround Tuesday wouldn't be a bad day for that. So it's not like what I'm saying is that this drop, there's a lot of fear, there's a lot of uncertainty, we know that, but the macroeconomic situation hasn't changed. So what have we seen? We've seen a lot of negative sentiment indicators out of the US, mainly about tariff concerns. We've seen some early price hikes on tariff concerns, but like inflation expectations, and let me just grab this chart here. Where is it? There, 2 seconds. There we go. If you look at longer term inflation expectations, they do remain anchored. We haven't seen a sudden big jump in inflation expectations moving higher. Let's just see if I can get this up. Right, you can see this Trueflation index, quite a good little index to look at US goods has been continuing moving lower and lower. It's down at sort of 0.3%. And this is designed to show an indication of what real inflation is going on in the US economy. So it's not like we've seen this spike higher. And it's not like we've seen lots of bad US economic data points. We have seen some negative projections for GDP. We've seen negative sentiment indicators. But if you look at the jobs market, continuous jobless claims, okay, it's comparable levels towards the high end of recent levels, but not a big change. Initial jobless claims, that wasn't showing that was a big concern last Thursday. Then we had NFP, unemployment rate towards the higher end of expectations, but it's, not pushing above 4.2%. Headline non-farm payroll, 151,000, was towards the lower end of expectations, but still, look, it's not an outlier. And ADP jobs, yes, it was lower. So you could say, but is it alarm bells ringing yet? No, it isn't. We're just in that kind of scenario where we've got a bit of a hiatus. We're in the Fed's blackout period. We haven't got significant data really until CPI. We've got JOLTS job openings, which we will look at and can move markets today. But it's the CPI that we'll be focusing on mainly tomorrow. So yes, we've got the concerns about Trump. He is speaking again today, but after our session. And we've got those constant drip of tariff headlines coming out that make for very choppy trading.
Yep.
But in looking at it all, a turnaround Tuesday is not a bad expectation for today, with the caveat that we need to keep an eye on JOLTS jobs. So that's my base case for today. The dollar is continuing its way lower, and that is being lifted. That has been sent lower by the lifting of the euro dollar. Do you see how it's continuing its way up higher again?
Yeah.
German defense spending, and there's optimism about German defense spending being boosted. So just in terms of context, Pantheon Macroeconomics, with the UK boosting its defense spending, and they're expecting it to go up to 3%, they're now expecting the Bank of England's rate at the end of 2026 to be at 4% now rather than 3.75%. So in other words, extra defense spending is expected to keep interest rates higher for longer. That's why we're seeing this divergence between German bunds here surging higher, but look at US treasuries, they're sort of staying relatively flat. So you've seen this big widening in the yield spread between German bunds and US 10-year bonds, which is why we've had this euro dollar surge higher. And it's more German spending that's expected that's just sort of pushing that up higher at the moment. So with that all being said, light calendar, Fed's blackout period, JOLTS jobs in focus. So now let's move over to the E-mini. We can see we've had that sort of turnaround from the Globex Open. And you can see that it's sort of bounced from midnight, from 5,560 up to sort of 5,640. And now we've had some pretty heavy selling, trapping those buyers underneath the VWAP on the weekly chart we're testing now the daily value area low and rejecting the weekly value area low, and we're testing the weekly point of control. So we're at a very significant area there, and these sellers trap those buyers. So looking on the daily, see, not only is it a weekly value area low, it's also a daily value area low at this 5,610. So definitely don't want to be selling into this, but we've got quite a lot of sellers over there at the 5,625. So I'm very interested to see if we get those trapped. That would be very interesting. And just noticing that these buyers up here got trapped earlier in the session. Nice, Najam. So Najam just sold there for 2 points. Very nice. Well done. Was that off the 5-minute candle? Nice cheeky trade. Well done. So we've got this area that we're coming into, this value area low. Wouldn't be surprised if we find buyers at the open. So I'm going to be watching out for that. But I've also got to be conscious that you've got buyers trapped there by the sellers on the weekly. So it's kind of a two-way thing that's going on there. And from the Globex Open, inventory is positive. So I'm expecting moved maybe down to this area and then push up and maybe a move back up to the 5662. So that's my hypothesis for today, is like either a move lower into this area and then making our way back up to the 5662, possibly if we can make our way up to the 5700. So I'm expecting dip buying, but I will be keeping a close eye on the VIX, which is moving to the session highs. And if we get back below kind of region, the 5600 region, and these developed value area lows on the left, and on this weekly value area on the right, then, I will go with shorts if we start getting under those levels. And we've obviously got buyers here at the 5624 region. So if they get trapped there, shorts will be back on. So I'm going to keep it flexible.
Yep.
The rhythm at the moment, we're kind of in this range with a change of rhythm since 12, definitely starting to move lower. And the important areas we've got are here and these areas here. So this kind of 5615 to 5605 is a very important area for us to look at. So that's kind of my rundown for the get-go. How about you, Paul? Let's make sure the squawk's on. What's grabbing your attention? What's standing out to you? What are you looking at as we get into things?
Not too much. The only thing that I was thinking about the other night actually was just that this whole sell-off, I feel like, has been quite orderly. It's been stair-stepping in a way.
Yeah.
And I haven't seen the panic that I'm wondering if that will come at some point. If you look at its fall, it's just kind of like, yeah, it's just moving down. You even had days where you pushed up. It's like a normal trend down. So I was just thinking generally this could last maybe a lot longer than anticipated without just like snapping back up. Or
Yeah.
B, we're still in for one of those like major plunges that hasn't come. That sort of like circuit breakers down type thing.
The thing is so look at COVID. You had 1, 2, 3, 4. Even in COVID, you had 4 down days and then 1, 2, 3 out of 5 days recovery.
Mm-hmm. Okay.
And then, so let's you see what I mean? I think I do see what you mean as well. It's been quite steady down, hasn't it?
Oftentimes, like I'm just waiting for either that major plunge. I don't know, that plunge down.
It's quite wicked, isn't it? Look, I think you're right, actually. Right, I will go for this on the 5 minute with these buyers being trapped out at the point of control.
Okay.
We're trying to, that's it, see if I can get back down. And I look to enter at the 5617. Just seeing, this is pushing higher now. We're getting buyers giving a little bit of indication where they want to go. All right, I just jumped in there because it looked like I was going to be missed. So I'm just going to jump in there now. Right, point of control moving up there now. Bullish engulfing that 15 candle.
Just market update following the US
headed up.
with indices in the US. They do open mixed. Nasdaq 100 outperforming. It's up about 35 basis points, although Russell 2000 does see more gains of about 70 basis points. For S&P 500 though, that's flat, and Dow Jones down about 0.5%. Let's follow choppy trade in the futures market since yesterday's cash close, with macro updates fairly light ahead of jolts at the top of the hour. For sectors, they do open mixed. Consumer discretionary, energy and real estate outperforming, while industrials, healthcare and consumer staples lag, with industrials weighed on by some cuts in guidance from some of the airline names. In the FX space, the dollar is broadly weaker against peers, raising gains earlier seen to start the week. Downside in the dollar index, largely stemming from euro and pound strength, with the euro boosted on optimism from Germany's Green Party co-leader with regards to a defence deal occurring this week. Meanwhile, downside has extended for the yen following Nikkei reports that Japan's government pension fund has decided not to raise its stock ratio in its $1.75 trillion portfolio. Moving to the fixed-base, treasuries are sold across the curve. Relative outperformance seen in the 2-year and 10-year yield, they're currently up about 2.3 basis points. And ahead for the fixed base, we do have a $58 billion 3-year note auction later today. And for crude, prices are at session highs with WTI and Brent up around $1 a barrel on the day. WTI at $67, Brent at about $70.30 per barrel. Just come amid Hungary noting crude shipments via the Druzhba pipeline have been suspended today temporarily while waiting further updates. And after the US cash close, the API will publish its weekly energy inventory data. In terms of expectations for now, headline crude stocks are seen building by 2 million barrels.
Oil control moving up. We're tussling with this area.
Just kind of rangy a little bit. We all know we want to go further lower, but will we get a big push up first? Unless we get turnaround Tuesday, as predicted.
Yes. VIX is just pulling off those highs, but it's still very elevated, isn't it?
Yep.
Buyers trapping those initial sellers, so that there's a bit of a shift around here. That's sort of holding for now. This is going to be an important test up here now. Let's have a look.
Very choppy ladders, erratic. Yeah. Thanks, Devon.
Yeah. 2475 is the breakout area. So let's see if we get that on the 1 minute with a bit of volume. That'll be interesting.
Yep.
Right. Okay, I've added a second position as we go up through here because that's just a decent area to add.
Next on the US calendar at the top of the hour, in just under 10 minutes time, we do have jolts. For job openings in January, they're expected to rise to 7.63 million from the 7.60 million seen in December. Today's headline figure will be watched carefully given doubts growing over US exceptionalism, with large attention also to be on layoff metrics, as well as the quits rate, which serves as a good leading indicator of wage growth. For reference, in December, the quits rate, that was unchanged at 2%, while the vacancy rate eased to 4.5% from the upwardly revised 4.9%.
That is true. We completely forgot about jolts happening in a few minutes.
Oh, I haven't forgotten about it.
Well, then maybe we didn't mention.
But
yeah, that could be one to consider for your trade.
yeah, it's been running through my mind as I was thinking, can I just get up to 5636, take it off, and then have time to prepare us for jolts? That's my dream scenario.
Yeah, you might get it. Nice, Mark. Mark's another couple points.
That's the spirit.
Yeah, right off that 5 minute sellers that are getting trapped, I'm assuming, at the 40. This is so volatile. It's incredible. 10-point move up in just seconds.
Just like that.
Yeah, Devon. Might have to leave early. I know.
I'm going to get us onto it in a minute. I'm just going to see if I close underneath this 5 minute candle, then I'll get to it. Right, okay. I'll just leave that running in the background. So what I'm looking for with the jolts jobs is we're looking for something that contradicts the recent weak non-farm payroll. So what we want to see is if that comes in above 7.9, then that should support the fact that the jobs market isn't failing. Now, I'm in the current situation, I expect that to be broadly supportive for stocks, but I'm not trading it because I could see it going either way. If it comes in lower, then that confirms a slowdown in the US labor market, and that should be negative for the E-mini. So if we look at the last jobs reading we had, we can see that job openings in the US, let's have a look, they are moving lower. So that's just showing you there's less jobs available in the US that are being advertised. So it is a general weakening of the labor market. Now, weakening of the US labor market is fine. What markets don't want to see is a collapse of the labor market. That's the major thing. So weakening's fine, collapse isn't. So if it comes under 7.0 and we start seeing it rapidly falling, markets will worry. If this number goes up, ideally, if it goes up above 8.1, 8.23, then that will be really quite positive and should say that the US labor market is okay. And in the current environment, that might just be a little relief because growth won't be seen to be tanking and falling off a cliff. So that's what to look for. Got 4 or 5 minutes till the data breaks. We're just sort of flirting around this point of control. There is still, in the 15 minute, these buyers still trap these sellers. And buyers are still in control from the standard deviation. This is a nice value area low down here. It is a decent area for potential recovery. Volatility, though, is starting to push higher again. So that is not a good sign for further upside.
4 minutes to the data. This could be some fireworks. See?
Update concerning ADNOC CEO says UAE's XRG will make very large investments in the US in the next few months.
1 minute to go. It will be in more focused jobs as well today. There's not a lot out there either, so.
Just under a minute now. To the top of the hour for jobs, we are expecting job openings to rise to 7.63 million from the prior 7.6 million.
So if we get a very strong reading, that should be positive for the equity market today. But don't trade it because it could go either way. Because a strong reading can mean higher for longer as well. So we've got to be careful with it.
10 seconds.
I would expect it to be positive for today. Let's have a look.
And that's 7.74 million. 7.74 million above the expected 7.63 million. Prior was revised down to 7.508 million from 7.6 million.
So it's mixed.
For the quits rate in January, that's 2 points up from the revised down 1.9%.
Okay, so that's mixed. I would expect that to be positive for today. Now, otherwise it'd be like it's negative, but I think it'd be positive for today because it's just showing that the US labour market isn't falling off a cliff. It's kind of doing okay. The prior is revised lower, but only marginally, so that should be positive, right? So let's have a look.
In terms of reaction, I was seeing a bit of choppy trade in the equity space, although we are a bit higher post Jolt's announcement. In terms of treasuries, I was seeing a bit of downside.
It's so big, like my my position was taken out on the drawdown.
Yeah, it's that the market is just so volatile.
It's crazy. So, first trade of the day was a breakout trade as we took out the day's lows on this 15-minute candle and just went with the break on volume on the 1 minute and just took that lower.
So we are still on the lookout for the short-term energy outlook from the EIA.
Then had these sellers trapping these buyers. So I wanted to go short. We also had some Trump headline, didn't we? So I wanted to go short on that, 2 positions. As it moved against me, I just wasn't happy with it moving that far against me. Closed it out for 2 losses. Then saw it going back in the direction, saw these sellers trapping these buyers again. So with trapping those buyers, standard deviation, I thought, okay, I'm happy this is going in the right direction. Took another couple of positions short and then took it off for a profit. So I was around sort of break even-ish. Then I took a couple of positions short with these sellers trapping these buyers against the point of control in the VWAP. So I took 3 positions, just micros, took 2 off down the lows and 1 off at break even. Then looking to go long with these buyers trapping these sellers. That was a mistake because I was really buying right into this developed value area here. That sort of dawned on me partway through. Fiddled around with a couple of positions, ended up with like a minor loss on that. Then seeing these buyers getting trapped up here on the 1 minute, that was the final trade of the day, realizing, hang on, these buyers here, they've all got trapped there. As soon as they were trapped on that candle, on the open of the next candle, entered some positions and just rolled it down to the first standard deviation and just called it a day. So positive for the day, which is a nice thing. Could have done better, but that's the way it goes. And looking forward to these crazy trading days tomorrow as well.
Yeah, for sure. And we've got CPI coming up tomorrow, I believe. Is that on Wednesday?
Yes, we do. 12:30, I think. So just be aware it's an hour early for guys who are not in the US.
That's true.
Double check. Yeah, 12:30. And it could be a big one. For those of you who can't be there, what we're looking for is something that, if it's a big, hot CPI print, then expect some more downside in stocks, probably quite volatile. So if it's 3.1%, if it's 0.5%, if the priors are revised higher or the same, core 0.5%, core 3.4%, then look for sharp selling in stocks.
Yep.
That's
all
the
right.
spoiler.
Preview. Sounds good.
Okay.
See you tomorrow, Giles.
Yeah, see you, Paul. See everybody.